All right, today we're diving into something really interesting from Captii Limited. Their latest quarterly results just dropped, and honestly, they've got a real mystery on their hands. Get this, their sales went down, but somehow their losses almost completely vanished. How on earth does that happen? Well, that's what we're here to figure out. Let's get into it.
So this is the big question, isn't it? How can a company's sales fall off, but their losses shrink by a massive 97%? I mean, it's a total head-scratcher. Usually, when your revenue drops by nearly a quarter, you'd expect the bottom line to look pretty ugly. But not here. Captii somehow pulled off the opposite. It's a puzzle that really makes you think about what truly drives a company's financial results, and we are going to piece it all together. Okay, first things first, let's look at the big picture. This is the headline number, the one that made everybody do a double take. For just a second, let's completely ignore the sales figures, the number that really matters to investors. That net loss, it improved so much you'd almost think it was a typo. Let's see just how huge this change really was. And wow, this chart really puts it into perspective. Just look at this. In the third quarter of 2024, Captii was in the red by 4.35 million Singapore dollars. That's a pretty hefty loss. Fast forward 1 year, and that massive number has shrunk down to just $140,000. I mean, the difference is just night and day. This isn't some small incremental improvement. We're talking about a massive, fundamental shift in the company's financial story for the quarter. If you want to boil it all down to one single powerful number, here it is, 97%. That's how much they cut their net loss year over year. That is an absolutely incredible figure. But it just begs the question, how did they pull it off? Now we're getting to the fun part.
All right, and this is where the plot really thickens. Because the obvious answer, right? You'd think, oh, they must have sold a ton more stuff. But that's completely, totally wrong. And this brings us right to the heart of the revenue riddle.
See, this is what makes the whole thing so fascinating. While the losses were disappearing, so was the revenue. In Q3 of 2024, the company brought in $4.84 million. A year later, that number fell all the way to $3.70 million. That's a drop of almost 24%. So let's get this straight. The company made less money, but somehow lost way less money. How is that even possible?
So you might be wondering, where did this revenue drop actually come from? Well, this chart here breaks down their sales. They've got two main business segments, Unifiedcomms and GlobeOSS. And the financial report is pretty clear. This wasn't just one problem area dragging down the average. Nope, both of their main divisions saw their sales fall, which, makes that 97% loss reduction even more baffling. Okay, so if growing revenue isn't the answer, we have to look somewhere else entirely. There's got to be a missing piece here, something that explains this massive swing in profitability. It's time to solve this profit puzzle. And here's the key to the whole thing. The secret to Captii's incredible Q3 wasn't about what they earned. It was all about what they didn't lose. There was a massive expense on their books last year, and this year, it's pretty much just gone, vanished. Let's take a look. And here we have it. This is the smoking gun right here. In Q3 of 2024, Captii reported other losses of almost $4.9 million. Now look at the same quarter a year later. That number has plunged to just $22,000. This single line item right here almost perfectly explains the entire turnaround. So the next logical question is, what on earth was that giant loss? Okay, so the financial report tells us that most of this was something called a fair value loss on unquoted investments. That sounds complicated, but here's what it means in plain English. Captii invests in private companies, startups that aren't on the stock market. In 2024, they had to officially say, hey, we think these investments are worth less now, and that created a huge paper loss. Now, why is this so important? Because a paper loss isn't a cash loss. No actual money left their bank account. It was just an accounting rule. So in 2025, it was simply the absence of that huge non-cash loss that made the bottom line look so much better. Now, that big investment write-down was definitely the main event, but there was another little piece of this puzzle that helped things along. The company's gross profit margin actually went up a bit. All this means is that they got a little more efficient. For every dollar of sales they made, they got to keep a slightly bigger piece as profit. So even though they were selling less, they were making more from each individual sale. It's not the whole story, but it's an important detail. So, we've pretty much cracked the case of the disappearing loss. But let's add one more layer of detail here by quickly looking at how the two main parts of the business actually performed. You could call it a tale of two segments. And well, both of them were facing some pretty tough headwinds.
This table really lays it out clearly. The first segment, Unifiedcomms, saw its revenue drop by about 11%. Not great, but manageable. But then you look at GlobeOSS, and holy cow, revenue there plummeted by over 40%. That's a huge hit. This just goes to show that even though the bottom line looks way better, the company is still dealing with some serious challenges in its core operations.
Okay, so with that pretty complicated picture in mind, a much better bottom line but shrinking sales, what does the future actually hold for Captii? Let's wrap up by looking at what the company itself is saying about the road ahead.
And to their credit, the company seems to be pretty realistic about the whole situation. They're straight up saying the outlook is challenging. They're facing intense competition on pricing, and they're having trouble closing new deals. So what are they doing? They're focusing on what they can control, which is being as efficient as possible. But despite all those headwinds, they do end on a note of being cautiously optimistic about how the rest of the year will pan out.
And really, that brings us to the big lingering question. This quarter was a masterclass in cost control, no doubt about it, a huge step in the right direction. But here's the thing, you can only cut costs so far. For any company to have a healthy future, it needs to grow its sales. So the real question now is, can Captii take this incredible feat of cost management and now apply that same energy to fixing its revenue problem? Can they finally turn this much smaller loss into a real sustainable profit? Well, that's the story we'll all be watching in the quarters to come.